Print, email, Facebook, Twitter. More markets shrug off increasingly fractured G7 trade relationships, but future remains uncertain. So much uncertainty, so little time. Faced with grumbling trade relationships, a grumbling G7 group of nations, or G6 plus the US, potentially grumbling European states, uncertainty over central bank meetings and a meeting between US and North Korean leaders, the markets chose to look on the bright side of things last week. In the US, the S&P 500 was up more than 1.5%. The ASX 200 gained almost 1% and Asian markets were all stronger. Only Europe was a bit lackluster, down 0.2%, but a lot of that could be sheeted home to Italy still trying to get its houses at Parliament in order. Futures markets point to a positive start on the ASX when it reopens after the Queen's birthday holiday. However, that optimism may not survive if the markets take a dim view. US President Donald Trump's furious attack on his co-world leaders over the weekend. Wall Street closed before the G7 summit's acrimonious end, but it must have some idea things would not end well. US President Donald Trump arrived late in a grumpy mood and left early in a worse one. Marching out of the meeting, Mr. Trump issued his own blunt communiqué separate from the other 6 leaders. "We're like the piggy bank that everybody is robbing," Mr. Trump observed about the role of the US in global trade as he headed for Air Force One. Not that the G7 leaders should take it personally. In Mr. Trump's mind, they are all part of a global conspiracy to rip off the US. This isn't just G7, I mean, we have India, where some of the tariffs are 100% and we charge nothing, Trump said before voting for Air Force One. "And it's going to stop, or we'll stop trading with them." The official communiqué ended up being more a G6 thing. Canada, France, Germany, Italy, Japan and the UK, after Mr. Trump ordered the presidential rubber be used to erase any mention of the US from the document. What was left was a rather bland and pointless set of words from the weekend retreat everybody would like to forget, but won't. "We strive to reduce tariff barriers, non-tariff barriers and subsidies," the communiqué said in part. Yup. Everybody also backs motherhood too. A quick check of global tariffs shows the US is mid-table in terms of slapping on protectionism, although slightly higher than the freer trading likes of Canada and Japan. Central banks meet. It was a busy week for the big central banks this week, with the US Federal Reserve, European Central Bank and Bank of Japan all meeting to have another look at their interest rate settings. The Fed is the only one likely to move, pushing up its target rate by 25 basis points to the range of 1.75 to 2%, with that move pretty well priced in. The interest shifts to the always mysterious dot plot of the Fed's interest rate projections. There is a reasonable chance the voting members of the Fed's rate-setting committee will push for another couple of hikes this year to take the target to 2.25 to 2.5% by the end of the year. That would push the US to a full percentage point above where the RBA is likely to end up, and put a bit more downward pressure on the Australian dollar. The ECB is likely to keep its rates parked at zero, where it has been since February 2006. The only real news is likely to be the announcement of a timetable to turn off the ECB's printing presses in the €2.55 trillion, $4 trillion, quantitative easing program. It is not exactly synchronous tightening across the Atlantic, but it is an indication the era of cheap central bank money may be winding down. The ECB has made it clear it will only start raising rates well after its overworked printing presses cool down. The other issue the ECB has on its plate, again, is slowing growth and rising political unrest. The big Swiss investment bank UBS argues the ECB will most likely look through this and put an end to bond buying program later this year. Moreover, some countries may have an interest in reducing the support to a populist government. After all, the program also entails buying Italian government bonds. UBS told its clients, the Bank of Japan has only moved once in the past decade, and that was a cut to minus 0.1% a couple of years ago. That stasis is almost certain to continue, particularly given a contraction in first quarter GDP leaves it on the verge of sliding back into recession. Will jobs growth finally start boosting wages? One of the prominent themes of the Australian economy is expected to play out again this week. Another 20,000 jobs are expected to have been added in May, but unemployment probably won't have budged from 5.6% when labor force figures are released on Thursday. Jobs are growing at a solid pace, but so is the population, so unemployment is not declining. For wages growth it is a nil-all result as there is still a fair bit of spare capacity floating around in the jobs market. But things are cooling. Trend jobs growth has slowed from around 30,000 per month at the end of 2017 to around half that now. CPA's Michael Blythe says the underlying picture is sound. The stalling in the unemployment downtrend reflects a large rise in labor force participation, Mr. Blythe said. In other words, jobs growth has generated an encouraged worker effect, spurred on by initiatives in the healthcare sector like the National Disability Insurance Scheme. Mr. Blythe said he would be focusing on the latest readings on labor underutilization. The underutilization is the combined ranks of the unemployed and underemployed, those who would work longer hours if they were available, with the underutilization rate sitting at around 14%. It is not difficult to see why there is little pressure forcing wages up. However, Mr. Blythe said this might be slowly changing and the May data may show the labor market is getting tighter. All measures of job vacancies are rising at a solid pace, he said. Business surveys are sending positive signals on labor demand. The theory says that should drive underemployment and underutilization lower. Growth in hours worked is running ahead of growth in headcount at present, so labor market slack is slowly being squeezed out. Well, that's the theory at least. So are we confident? The other key bits of data out next week will be measures about how Australia is collectively thinking about the immediate future. Despite better than expected first quarter GDP numbers last week, euphoria may not be overflowing. Certainly the NAB's respected and important survey of business conditions and confidence, Tuesday, should continue to be tracking along at robust levels. The same may not be the case for consumers in Westpac's monthly survey, Wednesday. A promising start to the year has faded, and even the tax cuts offered in May budget failed to stop a slide in consumer sentiment. While optimists still just outnumber pessimists, it may not last. Petrol prices are going up, property values are sliding and wages are going nowhere much. The GDP numbers were a bit like a donut. They looked tasty enough, glazed with a strong performance by exporters. The trouble is there was a big hole right in the middle where domestic consumption was supposed to be. The other measure of confidence will be among home buyers, with April's home loan data out Tuesday. Mortgage approvals were noticeably weaker in March, to be almost 4% weaker over the year. However, the real weakness was in the investor sector, which is now 16% lower than a year ago. Recent auction data does not suggest the investors have been back and bidding. Tightening lending standards and the prospect of capital losses have certainly taken a bit of wind out of the property bulls. Australian date event forecast Monday 11/6/2018 Queen's birthday markets closed Tuesday 12/6/2018 Home loans April falling, down 2 PC in March. Investment loans down 9 PC. Business survey May, NAB series showing buoyant conditions in business Wednesday 13/6/2018 RBA speech Governor Philip Lowe speaks on productivity, wages and prosperity. Consumer confidence May, Westpac series, likely to weaken with on higher petrol falling house prices Thursday 14/6/2018 Jobs May, 20k new jobs, unemployment stays at 5.6% Friday 15/6/2016 RBA speech assist Governor Lucy Ellis speaks on infrastructure overseas date event forecast Monday 11/6/2018 CH, new loans May, insight into credit conditions Tuesday 12/6/2018 US/North Korea, Trump-Kim meeting Mr. Trump's recent summit form has been interesting. US inflation May, CPI rate around 2.5 PCUH, foreign direct investment May, has been pretty stable for a while. Yes, business confidence May, NFIB series, getting a bit softer, but still positive Wednesday 13/6/2018 S, Federal Reserve rates to decision at 25 basis point hike. Smart Money says 6.7 PC growth yo-yo. Industrial production could be cooling a bit if manufacturing surveys are correct too. Employment now below 10% Thursday 14/6/2018 ECB rates decision another hold, but details on ending program likely. Monthly data April. Fixed asset investment, industrial production, retail sales have all been solid as retail sales May, flat incomes squeezing spending Friday 15/6/2016 as industrial production still strong inflation May, weak, around 2 PCO Bodge rates decision no change print email Facebook Twitter more.